Hello, everyone. I'm Peter Towers, Managing Director of ESS Small Business and ESS BIZTOOLS. Welcome to the COVID-19 Survival Panel. And today we're going to discuss research and development, early stage innovation company, and I will give you an update on the latest situation with COVID-19 strategies for businesses all around Australia. To those of you in Victoria, especially Melbourne, I hope that you're feeling a little bit better today, and hopefully the situation will return to normal as soon as possible. If you have any questions, can you please type them into chat, or you could send me an email, peter@essbiztools.com.au. I know many of you are watching these video recordings at a time more convenient to you, but we would love to hear from you if you have any questions. I want to start with research and development because many of you may have been undertaking research and development activities during the lockdown period of COVID-19. The first thing to appreciate is that the research and development incentive rebate can only be claimed by a company. The company must have spent in excess of $20,000 on legitimate research and development. And the companies with turnover less than $20 million, which is basically the SME market, obviously, the rebate is 43.5% of the claimable research and development expenditure. So let's look at the research and development journey. It starts with an idea. You may have thought of something at 3 a.m. in the morning when you wake up worrying about business issues, or you may have thought about it at smoko or having a beer at the end of the day, and you've had a bit of a discussion and you've worked out it could improve your business activities. So the concept then is you would identify a project. This is something worth looking at. Perhaps you put together a small team that's going to research it, and you would be undertaking some preliminary investigation. Please keep notes, start a file, start writing items down as to what you are trying to achieve and what you've discovered in the initial review. And then you have to undertake what the legislation calls a prior art search. This is where you do some research on the internet and through making inquiries to see whether someone else has already solved the problem which you've got. And now this is a worldwide search. You're not expected to be able to find out information that hasn't yet been published or developed into patents for products. But you need to do some searches, and please keep details of the results that you have from those searches so that you have documentation to prove that you have undertaken some prior art searches, because these are required as part of your documentation if you wish to claim the research and development incentive rebate. And then what has to be done is you identify the hypothesis. An hypothesis is where you make a statement and you either then set out to prove or disprove it. It doesn't matter, incidentally, if you disprove things. It doesn't matter if, based on your experiments, that you find that something does not work. That's what research and development's all about. But as long as you have gone through the proper processes in the first instance. And then we would have the results that you would have to record of the experiments that you have undertaken. What did you do? You heated something to 250 degrees centigrade, or you processed it for 5 minutes, and you then I observe and evaluate the results. That's what research and development's all about, and this needs to be documented. Now, you don't have to write War and Peace, but you do need to keep some records. On a certain date, the team undertook the following experiments, and these were the results. So this is what came out of your observation and evaluation. And what this will lead to you is a logical conclusion. And that conclusion could well be, is this a worthwhile project? Is this something that your company should be investing money in, or going to the market and trying to raise some capital so that you've got funds to develop it? So that's the research and development phase. If you've been undertaking some research during the lockdown, or you're thinking about it from now on, please talk to your accountant. And if your accountant is preoccupied with taxation matters or helping other clients with JobKeeper information, you can contact me. Send me an email, peter@essbiztools.com.au, and I will be happy to introduce you to one of the accountants who are our subscribers all over Australia, who could help you, or we might be able to help you ourselves. But please do something about it. I now want to move into early stage innovation company, because this is the logical extension once you've finished research and development. And that's what the government envisaged when they introduced this legislation about 3 years ago. Unfortunately, thousands of small, medium enterprise operators have got no idea that this status for a special company, which will assist you to raise capital, exists. And on a personal disappointment, many accountants do also not have a clear understanding of what this special status means for young companies, because it's been established so it will assist a young company to raise capital to commercialize your research. So companies need to have developed products, processes, services, organizational methodologies, and marketing methodologies. That's the general group. That's just about everything you can do if they are going to take advantage of trying to qualify as an early stage innovation company. And at the end of this presentation, I'm going to outline to you what the clear advantage is, because if your company qualifies as an early stage innovation company, the people who invest in your company receive an attractive benefit. And the government has done that deliberately to encourage investors to invest in young companies in Australia. So the company must be under 3 years of age, although there is an exemption that a company can be up to 6 years of age with certain qualifications. I haven't covered them in today, but if your company's older than 3 years and you've undertaken the type of activities we're going to refer to, please send me an email and I'll give you details of what needs to be done. If your company is aged under 6 years of age, there's a possibility it could still qualify to be known as an early stage innovation company. First of all, the company's turnover needs to be under $200,000 in the last 12 months. The income figure does not include any grant money received from the Accelerating Commercialisation Grant, but it includes any other grant money that you may have received in that 12-month period, but it doesn't include any grant money received from the Accelerating Commercialisation Grant. And expenditure for the company in the 12-month period also needs to be under $1 million. Now that's all types of expenditure, including research and development. And the reason I've said that will become obvious in a few minutes. The company must pass one of two additional tests. So it's gone through the first test, under 3 years, the turnover test and the expenditure test. There are then two further tests. The first one is called the gateway test. And if the company passes this, it doesn't have to go on to the next test, which is called the principles test. So let's have a look at what's included in the gateway test. The company needs to accumulate at least 100 points from answering the questions that are contained within the gateway test. Research and development. There's a percentage of expenditure So if the company has spent 15 to 49.9% of its expenditure in that 12-month period on research and development that is claimable in the company's tax return, the company would accumulate 50 points under this test. If the research and development expenditure actually was 50% plus of the expenditure, the company earns 75 points. Now, there's no specification as to what the total expenditure happens to be. It could only be $20,000. And if the company's spent $15,000 of that $20,000 on research and development, well, they're going to earn 75 points. And if the company's expenditure was $700,000 to claim the 75 points, the company will have needed to have spent in excess of $350,000 on research and development. So it varies. So research and development is the first big item as part of, do you qualify under the gateway test? The next test is has the company been administered or admitted to the Accelerating Commercialization Grant Program. Now, this could be at any time in its 3-year life. If it has, it earns 75 points. And the company obviously has got documentation from the Entrepreneurs Program identifying that the company has been admitted to the Accelerating Commercialization Grant Program. Has the company been admitted to an accelerator program? And there are a number of these conducted all around Australia, primarily in capital cities, but it earns 50 points for that. Has the company already been able to attract from arm's length investors an aggregate of at least $50,000 in investments for the acquisition of ordinary shares in the company? If so, the company earns 50 points. Has the company successfully applied for a patent registration anywhere in the world, as long as the company owns that patent? Or has the company registered a plant breeder's right anywhere in the world? It earns 50 points. Has the company registered an innovation patent? Company earns 25 points. Has the company registered a registered design? It earns 25 points. Has the company entered into an agreement in relation to research and development activities with an institution that is named under the Higher Education Funding Act or the Research and Development Act? And in either of those cases, the company will earn 25 points. So you add those points together. If they exceed 100, the company has self-assessed as being eligible for the early stage innovation company. There is no need to apply to the Australian Taxation Office or to Oz Industry. The company has been accepted and you are free to negotiate with potential investors. The system that we have developed, which our subscribing accountants all over Australia can utilize to help you, is to put all that together in a proper process with appropriate documentation so that a potential investor can get confirmation. They can take it to their own advisors so that they are well satisfied that if they invest in a company that has been certified under the gateway test as having passed that test and therefore as an early stage innovation company, that they will receive the benefits. And I'm going to outline to you shortly from having invested in to a company that has been approved as being an early stage innovation company. Now, if the company doesn't qualify, and this can come about because the company's new, it hasn't been doing much, possibly other than some research and development, hasn't got round to claiming it in the company's tax return yet, we can then move into the principles test. So the principles test has got 5 key questions. Is the company genuinely focused on developing for commercialization one or more new, significantly improved products, processes, services, marketing, or organizational methodologies? Has your company done that? Is there a high growth potential for these products, processes, or services or methods? So the key words there, high growth potential. And what Oz Industry and the tax office are looking for is more than a yes, no answer to these 5 questions. I think they need around a A4 page of information to get support for these answers. And in some cases, you may have to get an external expert to prepare some of these reports for you to give you some substantiation. And in most cases, a small, medium enterprise will need assistance from your accountant in putting all of this together. Let's look at the next question. Does the business have the potential to be able to scale the business? The government doesn't want to grant the status of an early stage innovation company to a company that is content to remain on a few $100,000 turnover for its whole existence each year. What they're looking for is companies that have got the willpower and the ability and the technology to be able to scale up so that the business can grow to a larger extent. And why? Well, of course, if the company grows, there's a fair expectation the company's going to trade at a profit and the government is going to recoup some of its outlay that it's made to investors that I'm going to tell you shortly about through increased taxation. So can your business successfully scale up? Can the company demonstrate that it has the potential to address a broader market than the local market, including global markets? Again, this is part of the concept that the government is developing, that new companies that are going to be supported under this classification as an early stage innovation company will be able to offer services to a significant market beyond where they're currently operating. And can the company demonstrate that it has the potential to have competitive advantages? If the company hasn't got any competitive advantages, it's not going to sell much product in the marketplace. So that's the 5th question. What then needs to be done is a due diligence report should be prepared by your accountant, or if your accountant is busy doing tax returns or JobKeeper assessments, you can contact me, Peter at essbiztools.com.au, and we will introduce you to one of our accounting firms that subscribes to our products. And these firms are situated all around Australia. And they will be able to assist you because you'll need a due diligence report that shows the answers to each of those 5 questions and also covers the answers relative to the preliminary test, which is based on the age of the company, its turnover, and its expenditure. And this needs to be submitted to the tax office, who will issue a ruling, and that ruling will say that they're approving the company until a certain date, normally the next 30th of June, that the company is an early stage innovation company. And you're then able to take that document together with the due diligence report, you put it all together. And in our case, we put it so you have it on a computer stick so you can hand it out to potential investors who are showing some interest in your company. So that what they then know is that they can obtain some taxation benefits if they invest in your company. So let's look at it, because I've been talking about it right from the start of this presentation. What's in it for investors? Well, the investors receive a tax rebate of 20% of their investment. 20% calculated. If they are a sophisticated investor, they can earn a rebate of up to $200,000 calculated at 20% of their investment, which obviously computes to $1 million. Retail investors can receive a tax rebate of up to $10,000, which commutes to the upper limit that they can invest, a retail investor, of $50,000 to a company in a 12-month period. Now, for investors who retain the ownership of the shares that have been allocated to them as part of this early stage innovation company status process, if they've owned those shares for longer than 12 months and less than 10 years, they don't pay any capital gains tax at all. And if they've owned the shares for longer than 10 years, what happens at the end of 10 years is the company is revalued and the investors have a new cost price determined, which is from that figure that any capital gains tax would be calculated. Thus achieving a significant reduction in capital gains tax. Are you interested? Well, you can obtain more information from your accountant, or you can email me, peter@essbiztools.com.au, and I will give you some advice and give you names of accountants you could talk to. But please do something if you are looking to raise capital and you meet that general criteria of having developed new products, processes, services, organizational or marketing methodologies. Let's now go to the COVID-19 update. Well, there's still a lot of problems all around Australia, particularly in Melbourne and other parts of Victoria. So the government is continuing JobKeeper immediately at a reduced format through to March next year. If your turnover reduces by more than 30% in the December quarter, you can apply to be admitted to JobKeeper for the March quarter. So talk to your accountants about that. Also, the Australian government and the Reserve Bank have supplied funding to banks and financial institutions at low interest rates for them to be able to market those loans of up to $1 million to businesses for any purpose. And those loan applications may be made at any time up to 30 June 2021. And those loans are 50% guaranteed by the Australian government. To make these types of loan applications, though, you're going to need a business plan, a budget, and a cash flow forecast, which your accountant can assist you in the preparation of. Or if I said before, your accountant is too busy on other matters, you can contact me and I will talk to you about those documentation requirements that you will need. Let's look at your action plan. Have you already developed your strategies for 2020-21? Have you got them in a proper plan, or are they just written on the corner of an envelope? If not, why not commit the time, the quality time, to having them documented? Talk to your accountant or give me a call or send me an email and I will talk to you about the development of your strategies. Do you need to raise funding? Is it obvious when you start doing some thinking based on your business expansion? And one of the big worries I understand that the Small Business Ombudsman is very concerned about is the significant increase in the amount of money owing to small business by customers through debtors. And this is going to cause some real problems. So you might need some more funding in your business. Where are you going to get it from? If you've got any spare assets, you can offer the bank a security. Or if you've developed a new product, process, service, you might want to look at the concept of the early stage innovation company status that we talked about earlier. Or perhaps you would prefer to try to raise up to $5 million from being a crowdsourced funding equity raising company. In 12 months, the company could raise $5 million. If that is what you're looking for. Or you could utilize Section 708 of the Corporations Act, which enables capital raising from a mixture of small business purposes or for small business purposes by retail investors and sophisticated investors of up to $2 million from no more than 20 investors over a 12-month period. This is our last webinar for small businesses in this series. We've presented 23 of these webinars, and we're going to change the format because hopefully we're starting to emerge from COVID-19 and business people need to be thinking about another range of issues. If you would like to be on our mailing list to receive emails alerting you that a new conversation has been recorded featuring business guidance experts, please send us an email, jenny@essbiztools.com.au, and Jenny will make sure that you receive notification of upcoming webinars. Or you can visit our website to see a whole range of information, www.esssmallbusiness.com.au. Thank you for your interest in this series of webinars that we've been presenting over the last 6 months. We trust that it has been beneficial to some of you. COVID-19 is still affecting us all around Australia and indeed the world. So please stay safe. If you've got any questions on any aspect of what I've discussed with you today or any matter that's been discussed over the last 22 webinars, and you can view those by going to our website, www.esssmallbusiness.com.au. If you need more information, please send me an email, peter@essbiztools.com.au. Good luck with your business activities. Have a great day. Goodbye. And I hope that everything works out fine for you and your families as we try to get out of this very difficult period. Goodbye.